Hi, it's Nero here from Investment Rise, and there is no doubt about it. Definitely in many parts of New South Wales and Queensland, we are in the midst of a property boom. I mean, we're constantly seeing articles like this from the CBA predicting extraordinary price rises. But I also see a number of people who are thinking about entering into the market, but they're a bit nervous. For example, I got this comment on my last episode from DCX who said, what about JobKeeper coming to an end in March? And I've seen many others say, look, prices have risen so quickly, especially from October, which was actually when you said the property boom was starting. Surely that means it's getting a bit bubbly and maybe prices are going to correct. And, what about the weakness in the economy? And what about JobKeeper ending? And so if you've got that concern, I really want you to stay until the end of this episode, because one thing I can tell you is that property prices are rising. We are in the middle of a boom, but this boom will end at some point. Every property boom does, right? There is going to be no argument on that. But the question therefore is, when is it going to end, and when should you enter? Because you don't want to be the kind of person who sees property prices rising, but then you're worried, you're fearful about making a mistake, and so you keep looking for reasons not to enter the market, like maybe it's JobKeeper right now, and maybe it's something else in the future. But then you wait and you wait and you wait, and you see prices rising. You see lots of people making lots of money, and you finally go, okay, now is the time for me to enter. And because you waited so long, just at the moment that you enter the market, that's when the boom ends and property prices take a slight dip, as they almost always do, because almost every boom overshoots the mark, right? And I don't want that to be you. It's, for example, like a lot of people who bought property in Sydney and Melbourne in 2017, especially in the apartment market. Many of them today would still struggle to sell their property for what they bought it for, right? So I don't want that to happen to you. I want you to be in a position where you can take advantage of this property boom rather than missing out. So let's come back to the question of, well, what happens to the property market when JobKeeper ends in March? Okay, now to answer that question, we need to go back and look at, well, what is driving property prices? Now, basic economics says that when demand is greater than supply, then property prices will rise, all other things being equal, right? And at the moment, we know there's a severe supply shortage. I've spoken about this in past episodes, but at the same time, we have an increase in demand being fueled by low interest rates and access to credit, okay? So the question then is, well, who is actually driving this demand? Who's actually buying these properties? And if you look at this next chart, which is all about housing loan approvals, what you can see is that house prices and home loan approvals are most in demand from owner occupiers. Okay, so for people who are looking to upgrade their home, that's the biggest driver. So it's either as people upgrading their home, as I said, or people moving maybe outside to the outskirts of Sydney or Brisbane, moving interstate, whatever the case happens to be. But it's primarily owner occupiers. Okay, so now keep that in mind. So now let's go and look at this following chart, which shows us, it's from the Australian Financial Review, who did a detailed deep dive into the jobs losses data from the Australian Bureau of Statistics. Okay, and what we have here is a graph, and what it shows us quite clearly is who is being impacted the most as a result of the weakness in the economy. And what you can see here is that the majority of layoffs have been in the accommodation and food industries, right? Let's say that's the hospitality industry as a whole. And then if you drill down further, what you'll see is that unfortunately, the people who have been most impacted by the weakness in the economy and the COVID pandemic are the lowest income earners in the country. Okay, and this is not a judgment call, that's just the facts as they stand. And so you've got to ask yourself, do you believe that all of these people who are looking to buy their own home, upgrade their own home, whatever they're doing, all these owner-occupiers who are driving the demand for home loan approvals and driving the demand for property and hence driving property prices up, do you think the majority of them are people who are the lowest income earners in the country? I mean, did you know that if you are on JobKeeper right now, it is almost impossible to get a home loan? Okay, so therefore, you almost have two groups of people. You do have the people who are on a JobKeeper, and that certainly is coming to end in March, and many of them will continue to struggle very sadly. But then you've got the others who are not on JobKeeper, many of whom are looking to upgrade their home. So when JobKeeper ends, it's going to have no impact on the people here who are driving property prices up, right? And this is not, as I said, not a judgment call. This is just the data as it stands. You can see that quite clearly. Add to the fact that 93% of jobs lost during the peak of the coronavirus back in March, April, May of last year have been recovered. 93%. Okay? And with unemployment on the decline, the bounce back in employment is the fastest on record after an economic shock. So what that means is the number of people who are unemployed is decreasing. So you've got lower unemployment. You've got the people who are driving house prices up, the people who are getting all these loans. They are people who are looking to upgrade their home primarily, although now investors are slowly starting to get back into the market, as you saw from that earlier chart. And why not? With prices rising, with many areas where the rents are covering the mortgage, now is a great time to get into the property market if you're an investor. But if you're someone who is thinking about, oh look, what about the JobKeeper and what's that going to mean for the market? What you're going to find is, and this is just from the data as I've shared with you, it's going to have virtually zero impact on the property market. Yes, some people who are renting right now, especially in the apartment market, I think that could take a hit. I think the rental market in the units is going to struggle and continue to struggle, but that's going to have no impact on house prices in many of these quality areas. So if you're someone who's thinking about, I need to wait to see what happens about JobKeeper and then I need to wait for something else, and if you keep waiting, sadly, I think what you're going to find is that you're going to miss out. Property prices are just going to keep going higher and higher and higher. And if you wait 1, 2, 3 years, maybe as some of you might do and some people have done in the past, you might find that you're paying for property that you could have got in at this level, you're going to pay at this level. And more importantly, you're going to get in at the very peak of the property market. You're going to get into the end of the property boom. And then you're going to regret your decision. So you really need to make a call about if you're going to get into the property market as a property investor, sooner is certainly better. And remember as well, there's another factor here that comes into play. At the end of March, most banks are going to be easing their lending regulations and lending restrictions, making it easier for people to get loans, meaning that people can borrow more on their same income. So what do you think that's going to do to property prices? Right? So the fact is that JobKeeper in and of itself ending, yes, it's going to place a strain on a lot of Australians, and I get that. And this is not a commentary about government policy. I'm just talking about what the impacts are on property prices. And certainly I'm not seeing any data pointing to any negative impact on the property market as a result of JobKeeper ending. The two can almost totally separate things. That's what's so different about this property boom, as I've spoken about in the past. So certainly if you're thinking about getting into the property market, but you want to wait for JobKeeper to end, I think you'll find that you'll probably end up paying more than if you got in earlier.
Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a half-hour phone consult with me personally. Either way, thanks again for watching.